Okay, so we are live, Mitesh, on Facebook and YouTube. Ladies and gents, thank you for joining us again this Friday morning, Friday the 8th of April. We thought we'd do another live video with Mitesh, who's heavily in demand following the last couple of videos we've done together. So, Mitesh, thanks for joining me. How are you?
I'm very well, Akhil. I've just been back from my holiday, so trying to sort of get back into the groove.
Good. Tell the viewers and listeners, where did you go?
So I went to Dorset.
Nice. And how was sunny Dorset? Was it sunny or was it cold?
It was just about right, I think. It's a bit
Lovely.
windy on the first day, but I think the weather was just about okay. 9, 10 degrees is just okay.
Good. And how was the? Is this still a holiday destination? Would you
Yeah,
recommend?
I would, yes. I was only sort of less than 5 minutes away from the town centre in Poole, lovely
Nice.
part in Dorset. And
Hmm.
then that was our base, and then we obviously drove around to Sandbanks, Turtle Dove, all the nice places, including Lyme Regis. So it was really good, very nice
Nice.
short break, and I'm back to work now.
You're back in the swing, and you're wearing a lovely. Is that a pink tie?
Uh,
Blooming pink.
I'd say it's a red tie, yes, and a lime green shirt.
Good, good. That's what we like. Nicely well groomed, and you had a haircut. So thank you so much. Anyway, more importantly, let's get back to business. So let's talk mortgages and property. So just
Sure.
give us a quick snapshot of between the last video and now. How have you found the market? What types of inquiries are you seeing come in? Just a quick short fire blitz.
I think what I've really noticed is that a lot of the clients are planning to invest, and I think they're becoming more savvy. So I think what they're also noticing that because of the increase in like your utility bills and increase in just general cost of living, they're also realizing that when they're looking at, you know, converting properties or trying to do some refurbishment work, and they're going out to get quotes for, the building works, they're realizing that the estimates they've had maybe 3 months ago aren't, aren't really realistic, and so the cost of trying to do some works within the property or doing conversions are far more expensive than what they realize in the first place. Several clients are sort of taking a back seat, reevaluating their project work and seeing whether whether it's the right type of investment, and looking at the yields and returns and seeing whether is it worth sort of spending their money on this particular project. So I've got clients like that as well. As you probably know, that 80% of my business is portfolio clients. So most of my clients at the moment are looking to refinance, and then raise the cash as a deposit towards the next purchase. So they're always on a hunt to try and get the right bargain.
No, that's good. And what we are, there's a lot of gossip out there. There's not enough supply on the market. And yes, you look at the stats, that is clearly true. However, if my philosophy is if you dig deep, you'll find your treasure. And it's the same thing with research. Now, if you keep your head to the ground, speak to the relevant agents, the local property sources in that market, explaining to them, be specific, I would say, is in the type of property that you want. You want a three-bed, semi-detached property in this location or within this radius, and this is your price point. If you be specific to that sort of nature, involving the estate agent, telling them who your power team is. My mortgage broker is Mitesh. My
Mhm.
solicitor firm is, ABC law firm. Here's my proof of deposit. Here is a decision in principle. I guess it just gets you up the ladder and a keen buyer in terms of the estate agent's point perspective. So that's good to see. So yes, supply is demand, but as Mitesh quite rightly said, a lot of our clients are still finding great properties, whether they're cash flowing very well or again opportunities to add value to those property to refinance as well. And there's lots of mortgages on the market that offer no ERC penalties in the buy-to-let space. Is that still the point? Is that still the options out there available?
There are options like that are available.
Yeah.
You'd have to look at your own scenario and see in terms of what the long term plan is.
Uh-huh.
And but for sure there are options like that available. I would say that if it's going to be something like 6 months or so, maybe you may want to consider a bridge finance option. So you'd have to be sort of very careful. I do have a scenario right now where it just becomes very tricky when you're thinking I'm going to raise some cash from a buy to let, or maybe I'm going to then move out as well and then going to move to another place. So should I then raise some cash now on a residential mortgage and then look at converting that to a let to buy? But then if it's all going to happen in the space of 6 to 9 months, is it really worth doing all that work right now? And would it be very realistic as a transaction, or would you rather then go and find that property, and whether we just start the process? Because what tends to happen with mortgage offers is that generally they tend to be valid for 6 months anyway.
Uh-huh.
So you're then better off realistically looking at the bigger picture and thinking, you know what, let me secure a property, moving in 6 months time or 7 months time. Let's just start a standard process of a let to buy scenario, and then have a simultaneous transaction for on a residential purchase as well. So I think you have to sort of, I'm just giving an example where you have to look at time scales and just maybe make a smart call and say, do I want to do a transaction that's going to last 3 months, and then suddenly within that transaction, I'm going to turn and say, by the way, um, I now need to then change the residential transaction once it completes to a let to buy. You've just recently done it, and then like within a month, you're going to change that to a let to buy scenario, which is not going to be a wise thing to, because the lender's not going to be very happy as well if you're going to just try and suddenly within 3 months and clear the debt.
No,
So you have to sort of look at the bigger picture and say each case you have to take on its own merit, and can get quite complex. I was just going to add one more thing about regarding the subject of having the right power team around you.
please.
So when I've been getting feedback from my clients around this whole aspect of not having enough supply in the market of the right type of properties, which I'm hearing a lot this year, I've recently, I mean, as soon as I've come back from my holiday, I've actually started networking with um, local estate agents and estate agents in and around the M25 area, especially. And I've now set up meetings with them, and some of them are independent estate agents as well. So they won't really just advertise properties just like that. They'll probably have something on the back pocket, and then when the right type of investor comes in, they might reveal what they've got, because obviously it's not been advertised on social media platforms, on Rightmove or any other platform. So I'm trying to build those relationships up as well, because I want to ensure that my clients, depending on where they're investing, if I know this year they're investing in a particular location, then I'd rather build up those contacts and let those agents know, look, I've got a bunch of clients that are looking in and around this area. If you could let me know, and
Yeah.
I'll put you in touch with my clients. It'd be great if we need to sort of work together. And so that's I'm going that extra mile to try and help my clients achieve the next purchase.
No, that's really good, and that's it's really refreshing to hear that. We're not just order takers and just transaction hitters. We want to work with our clients, so it's nice to hear that. Your clients are saying, Mitesh, I'm looking for ABC type of property.
Yeah.
You're then speaking to your power team to let them know that we've got an end user or an end investor that is looking for this type of property. Can you help, or can you inform us when these properties go live, or before they even go live on the regular, the right move in Zoopla portal? So that's really, really good, very refreshing to hear. So that's another reason, for those listeners out there, if you are looking to, even whether you are a seasoned investor or looking to join that property investment journey ladder, it's key to have the right people around you. And we appreciate as mortgage brokers, sometimes you might not be in the right position on day one to obtain a mortgage for various reasons. But what we will do is, guide you, hold your hand along the way to understand, what your end goal is, and how we can help plug those gaps in between. So it's very refreshing. So thank you for sharing that, Mitesh, with us. So what I wanted to do is I wanted to just quick fire questions with you, around, since the last video, what we've done, and some questions that have kept cropping up over the last few weeks.
Mm.
The first one's about cost of living. Living's going up. Gas prices, inflation, national insurance, taxes are all going up. So it's not all looking great at the moment. However, property prices are going up, inflation's going up. It's good for some property investors because that means their house values are going up as well. But the negative to that then is, the correlation to that is, the cost of living is going up, prices are going up. However, income is not going up at those levels. Now, how do we combat that by way of mortgage income multipliers? And are there lenders out there in the market that can give you five, six, seven times income? Tell us a bit more about that space, Mitesh.
So it's a very interesting question you've raised because what I have noticed recently is that lenders are gradually adapting their calculators.
Yeah,
So I know of one high street lender that already announced that they're making adjustments to their
yeah,
calculators, and basically which means that obviously what the quotation you would have had maybe 3 months ago on the maximum borrowing you would have had from that lender potentially would have been now less. Having said that, we work with certain lenders whereby you don't have to use their portal systems or get a credit check done to try and find out whether the system's allowing you to borrow the maximum amount of money that you need for your next purchase. We have lenders whereby we could just provide them certain information like your pay slips, the location you're buying, whether it's inside the M25, outside the M25, and they can come back and let us know whether they can help you uh, achieve the level of borrowing you need. So it's refreshing to know that those options are there. We do have lenders that also provide a 100% mortgage, which means you don't really need a deposit. But what they do ask is that if it's, let's say, a 4.5 times multiplier, they would ask for a 20% charge taken on either parents' property or grandparents' property or siblings' property, and that could be even a first or a second charge. So it's basically like the guarantor type mortgages. But
yeah,
I would say that those options are also still available. So lenders are adapting. They're still wanting to really help those first-time buyers or people who are moving home. Your traditional 95% mortgage is still around. So gift deposit is still an option. And if you're in the bridging space, yeah, if you want to get an investor on board and they're happy to provide you some funds and you do a loan agreement, we've got bridge lenders happy to do that as well. So I think so on a case by case basis, lenders are adapting. They are aware that this is going to be an area that would impact clients wanting to buy their first property. They'll be short on cash because you have to allow for legal and stamp duty costs as well.
hmm
So I would say that lenders are adapting. Not it won't be your high street lenders. I would say there will be some specialist lenders that they'll allow you to sort of do these type of transactions. But yeah, options are available.
good. So, in short, yes, you can get up to six, seven times your annual income, but it is subject to affordability, location, loan size, and even partially to do with your credit rating as well. So, obviously, higher your credit score and your credit report is clear, the chances are you get higher income multiples because you're more of a safer bet to the lender. You quite rightly said one major high street lender have announced that they're going to take into consideration the higher cost of living, and I think other lenders will adapt and follow suit very, very soon,
Yeah.
which does play a negative effect into the affordability. But the beauty is that if this is not a sales pitch whatsoever, but again, contact independent mortgage brokers for those viewers out there, understand the affordability, and the likes of us, we know we've got access to the very wide spectrum of lenders out there in the market. So we'll do our best to find you the most suitable lender, the suitable, affordable mortgage for you. So, do get in touch. There is no such thing as a silly question. And more importantly, it's better to understand the affordability on day one rather than going shopping for properties and then get disheartened because the affordability doesn't fit. So, yeah. So key number one is speak to the mortgage broker, understand affordability and the parameters that you need to work within. Good news. Okay, good. Another question that keeps coming up. You've just gone away to sunny Dorset, Sandbanks, and Poole in particular. Lovely, lovely destinations.
Yeah.
Um, what's the opportunities out there for second homes, and in
Mm.
particular second homes that I can let out potentially as an Airbnb, perhaps?
So obviously, I visited the Airbnb site and booked my holiday through that site. So
Good. Hope you left the landlord with a business card.
I left them a pen, so I'm sure
Good.
they'll have my details there. Um, but it's interesting, yeah. The point you're raising there, it's amazing. I mean, it's not cheap. I mean, although I've gone, before the Easter break, I know prices will shoot up in the Easter period and in going into summer. So these places for Airbnb aren't that cheap, to be honest.
Yeah.
So what I have realized, we've had chats with numerous lenders, especially those specialist lenders, and they've turned and said, look, if you got somebody on a nice, good income, a couple, they've got a low loan size on the main residence, and they're not paying a huge amount of money, and they've got a lot of equity in there as well. And there you've got a huge amount of disposable income. Then potentially you could apply for a second home, like a holiday home, and you could then use that as a Airbnb. You go and stay there a few days of the year, or that's 30 days or 60 days in the year.
Hmm.
Use it as a holiday let. So many options are there, which is very unusual, because a lot of lenders have sort of strict criterias. Because I would say if you're doing a holiday let, then we have a product that does holiday let. If it's an Airbnb, maybe we can't help you. So every lender is very different, but we have lenders that actually are very flexible. So it's refreshing to know. Again, as I said earlier, they're adapting to the market, they're adapting to the needs of the clients, which is really good to see.
Perfect. So it's good to hear that lenders are opening up their criteria around second homes. The affordability is certainly going up, like it was pre-COVID, and now we're back to good levels of income affordabilities, higher loan to values. There's still a huge market for 95% loan to value mortgages, and that's not just for first-time buyers; it's for home movers as well. So it's very, it's the market's very buoyant from a lender perspective. It's very liquid, and it's good to hear that lenders are opening up their criteria and they're thinking outside the box, and it's great to hear. So in short, yes, you can buy a second home, which gives you the opportunity to have a second home maybe near the coast, as well as you're not residing in that property, which then allows you to let it out. So it becomes a second income stream as well, which is phenomenal. So that's really good to hear. If anybody's got any questions, do drop them into the questions box. We've got a comment here from Lux LUXS 3335. Good morning, both. Ready for more great advice for both of you. So thank you so much, Lux. That's very kind of you. And that's what we want to do, is just provide you with some, short fire information and how we can help you become a successful investor or even a home mover as well. So that's very kind of you. So thank you for your comment there. Next questions around, again, obviously around mortgages, but in particular, 100% mortgages, the higher loan to values. So tell people more about, the options about 100% loan to value mortgages. Are they actually genuinely available? Tell us a bit more about 100% mortgages.
So I think I mentioned this earlier. So 100% mortgages are available. You basically need to understand your. This is more on the now. I think I'll move the conversation on the residential side. So if you're a first-time buyer, you're looking at 100% mortgage, then we do a normal affordability check with the lender. I would say that a realistic level of borrowing is generally 4.5 times your income.
Hmm.
And then what the lender would do is that they will look at the 20% of the purchase price, and then look to sort of get that 20% as a charge on your parents or your siblings' property or grandparents' property. So they're quite flexible. They can take that as a charge, as a first charge. So if it's an unencumbered property with where the mortgage is paid out, so potentially when the grandparents may have a property that hasn't got a mortgage, or it could be that it's your parents' property, they do have a mortgage, but there is at least um, 40% equity available, then the lender will be happy then to take a second charge as well. So a lot of flexibility around that, and that way, what tends to happen is that when you're at a position, let's say 2 3 years down the road, when your income is in such a position whereby you're able to then remortgage the whole amount when the fixed rate comes up for renewal, then potentially you could go to another lender. You would have a lower loan to value because you'll be a capital repayment mortgage. So the equity into the property would have grown because house prices are going up anyway. So there'll be an increment in the house price, and on top of that, the loan balance is going down because it's a capital repayment mortgage. So because there'll be equity in there, so even if it's just a 10% equity option, then you're looking at 90% borrowing. You quite easily then do a remortgage. That way, then the lender will then remove that first or second charge from your parents' property. That's how it would really work in practice.
No, that's good to hear. So, for those of you that are maybe perhaps short of deposit, there are lenders' options available where you can take guarantor charges or use your parents' or grandparents' savings as an offset facility to fill the gap with the deficit of deposit. Even if your income is short of the multiplier or the amount that you need, there are lenders out there in the market that again can plug that gap using siblings, parents, or grandparents' income to plug those gaps. So it's very refreshing to hear that lenders are looking to encourage first-time buyers to get onto the ladder, as well as help fill the gaps around income multiples. And we appreciate that now in the average house price, I think it's about 260, 270,000 now. So
Mm.
it's not a small amount of change. Average UK income is around 27,000. So we're looking at 10-time income multipliers. Now, you and I both don't know any 10-time income multipliers, but where lenders offer these guarantors mortgages, or help use various other savings models to help provide those mortgages, it's very encouraging. As I said, very refreshing as well, and it's very welcome news from the market as well, from a broker perspective. So, any lenders out there watching or listening to this, thank you very much. Okay, so let's move on to the self-employed.
Mm.
Self-employed, big remit for us. A lot of our clients, I would say, vast majority of our clients are self-employed. Um, but what my question there is around accounts. There's a lot of tendency in the market. I haven't got 2 years, I haven't been established long enough. Tell us a bit more about the flexibility for the self-employed type of applicant. How many years accounts do they need, and what are the parameters that lenders work to?
So it's a very good question because every lender is very, very different in this market. Some lender will say that we need 3 years trading, and
Mhm.
that would be mainly your high street lenders. Then you're going into an arena where lenders will say we need minimum 2 years trading, and those lenders are a huge number in the market that require 2 years trading history. So what they tend to do is your accountant would have prepared your accounts for the 2 years trading. They'll either then select the salary and the dividends taken. They will then look at the option to see whether they will take an average of the 2 years. If the latest year figures are higher, then potentially they could do that. There are some that will take the latest year on its own. They'll just take a judgmental view and say, look, I think there's not a massive increase. We're happy to take the latest year, and they'll take the salary and dividends. Then the other lenders that will turn and say, look, you're 100% director, or it's husband, wife, 50% direct shareholders and directors in the business. We were happy then to take net profits and add the salary on top.
Mhm.
Again, within that parameter, you can have lenders that will take net profits after corporation tax or net profits before tax. So again, lenders their criteria are very different from one lender to the next.
Yeah,
Having said that, we do have lenders that will say, look, if you've had 1 year's worth of trading, then we're more than happy to consider that.
yeah.
In fact, it works in your favor if you're in the same line of work. So for example, if it's, let's say, IT, dentistry, industries like that. For example, you've gone from employed to self-employed. There are lenders out there that they'll take a view, they'll write to the accountant, they'll take a projection, and then if you're there or thereabouts with 1 year's trading, they could take a view and provide lending based on 1 year's account as well.
No, I love that. And it's very good. There's lots of myths out there, as you quite rightly just busted out there. You need to be self employed for 3 years. No, you don't. You can be self employed just turned yesterday. If the job that you were doing before mirrors that, there's a good opportunity there where we can take into account your previous employed income and a projection from the accountant, depending on your profession. If you've only been self employed for 1 year, there are many lenders out there that accept 1 year's self-employed accounts, whether you're a limited company or a sole trader as well.
Yeah.
If you've got 2 years or more um, trading accounts, that will help furthermore because it opens the market out further to you. But the beauty is, if you're self-employed, there are various options available to you, whether you're a sole trader, partnership, or a limited company. Beauty is, make sure that you work with us, make sure you get the accountant in contact with us so we can liaise with the accountant, and quite right, as you said, around the projections, the accountancy certificates that the lender may require, and then we can look at projections and see how much the affordable mortgage is for you. And that's for for a home owner mortgage rather than a buy to let.
Yeah.
um, with regards to self-employed, anything else you want to add there around the self-employed perspective?
All I would say is that if you've come out of from a situation where your business, let's say, showed a loss
Yeah.
in the previous year, and now it's showing a profit, and you wanted the latest year to be used, we have lenders that actually can use the latest year's accounts, take the profits, full 100% of that latest year, and use that. What I would say is that, like we discussed about those deals with 0% deposit to put down, for a first-time buyer mortgage, or whether it's this type of transactions here. All I would say is that don't be very rate conscious, because I've seen I'm at the moment quite shocked to see how residential rates have increased over the last few months, especially when the Bank of England base rates been going up. So there were times when even last year, even up to leading up to December, I was seeing rates, fixed rates below 1%. There were deals below 1%. Now we're seeing deals below 1.5, and it's quite scary that there's been a big jump, and most lenders have followed suit. It's very hard now to get those 0.99 deals, 1.1, 1.2, 1.3, 1.4 fixed rates. And in my head, I always assume all these years working for 17 years in the industry that you can always pick up those cracking deals out there. But those deals I think have now gone, and it's all I'm trying to say. Just to manage expectations, is that you're not going to pick up those type of rates nowadays.
Yeah, it's a good point. It's not news that no one knows about. Interest rates are certainly going up, and I think they will certainly go up again on. I think the next meeting is May the 5th, where the committee get together. So there's a good chance that the rates are going to be increasing by, I would say, about 0.5% in May. I'm forecasting. Who knows what's going to go up by? But what the key takeaways from this are interest rates are going up, residential rates are going up, as you quite rightly said. It's sometimes actually cheaper to get a buy-to-let mortgage at the moment than it is a residential mortgage, which is phenomenal, which I still don't understand. But hey, that's another question for another day. So the key here is if you're looking to move home or take on a new mortgage, do it sooner rather than later. Do contact us so we can give you, a real analysis of where you stand from an affordability perspective and the costs of moving over to a new mortgage. Please do take into account any mortgages that are coming up for renewal in
Yeah.
2022. I would say we've got another 8 months to run off this year, right? So now's a good time to start reviewing those rates. Get in touch with the likes of Mitesh and I, and we can certainly help you moving forward. What else? Anything you want to leave us with, Mitesh?
I'll just say that just be mindful of your expiry dates for your buy-to-lets and for your residential mortgage.
Yeah,
And I would certainly urge all the listeners and viewers to review that, have a look at the options, whether even if it's worth paying that 1% penalty because you've got just over 12 months remaining. Compare that to what's available right now on a 5-year fixed rate product with on a buy to let basis, or the residential side. Just compare, and it doesn't take too long, maybe a 15-minute chat, and just see whether it's worthwhile making the move now. And it's interesting that I'm bringing this topic up because, as you rightly say, that everyone's saying the rates are going to go up. I'm one of those guys who I will never try and say the rates will go up or down. I will say, well, we'll have to wait and see. But every single person I speak to now is saying, we're 100% sure the rates are going to go up. They're not going to stay at 0.75. So, taking those views into consideration, regardless of my view, because I don't know whether it will stay at 0.75 for a month or two or not, or regardless of all that, what I would say is that so I think one important thing to understand is the reason why we keep on saying do it 6 months before is because by the time you start the process with the lender collecting all the information, applying, underwriting, valuation getting done, and the offer being issued,
yeah,
allow 2 to 3 weeks in that process. And what tends to happen is because lenders offers are valid generally for up to 6 months, regardless of any change in interest rates over that period. Once the application is already, it's not on offer, it's actually once the application is submitted,
hmm,
then your rate is actually booked. And I
correct.
think that's very important to understand that. So I'll leave you maybe as the last thought on that, is that you need to get those applications in to secure those deals,
Yeah.
and then just work smartly, especially if you've got a deal coming up for renewal this year.
No, I love that. Thank you so much. Quick question from Lux again. Thank you so much. What about a self-employed for less than a year? Who wants to buy a buy to let?
Um, it is a possibility if you're a homeowner.
Yeah.
Then it can be a possibility. Would have to sort of check with the lenders. They might look at the background of the client in terms of whether they've got a lot of debts maybe, or they don't have any debts, or things like that to make a difference. Do they have lots of savings in the background? How they're going to cover the void periods? All those areas, will have an impact. Having said that, we also have lenders that are quite smart. They'll try and say, why don't you opt for a joint borrower sole proprietor option? So you basically tag along with a dad or mom or somebody already is a homeowner. They add their name onto the mortgage. They have an income. They own a property, and then you become the sole owner of the property, rather than owning it jointly. And that could be a temporary option. And then when it comes of renewal and you look to do a remortgage, then obviously you can remove the other person's name from the mortgage. So that's another option that's available. As I say, each case you'd have to look at it on its merit, do the research with the lenders, and then that way you kind of know kind of where you stand. But yeah, it's not a straightforward scenario. You'd have to sort of dig a bit deeply into it. But those options are available. So joint borrower or proprietor is an option that I would recommend, especially on the basis that you then increase the number of lenders to choose from.
No, thank you. And even if you have been self-employed for less than a year, we've now leaped into the new tax year. So speak to your accountant. There might be a tax return that you can
Mhm.
file for 2022. So now we've gone past the 5th of April.
Very
So
good
we
point.
are now entering a new tax year. So no, thank you. No, thank you for so many points. And it goes back to showing there is no such thing as a silly question. Put your questions out there. We welcome, as a company at OMB, we welcome all types of inquiries, all types of clients, all types of situations, just simply because the market is so complex. But the beauty is that with the relevant experience that we've got, and more importantly, the vast amount of lenders in the market,
Mm.
there's always an angle to go at things in most instances, and I would say not. So listen, Mitesh, thank you so much for that. Welcome back after a few days off in sunny
Thank you.
Dorset. If anybody does have any questions, please reach out to Mitesh on his direct mobile number there on the screen. If anybody else has got any questions, please do reach out, as I said. And we look forward to doing more and more videos with you guys. As I said, this is going to be recorded and saved on Facebook and YouTube. Feel free to drop your questions below, and we'll do our best to answer them or return calls and emails as well. We wish you a lovely weekend, and we'll leave you to it. Mitesh, thanks again.
Thank you, Akhil. Thanks a lot.
All the best. Bye bye.